Donald Trump seems to be on a one-man crusade to single-handedly devastate both the American and global economies. As a consequence of this, the financial firm JP Morgan has the probability of a recession at 60%. Trump is publicly begging the chairman of the Federal Reserve to cut interest rates for him. And that chairman, Jerome Powell, Trump appointed, is telling him no. We have a lot to unpack, so I figured it might be good to bring in an actual economist, somebody who's highly educated in this field, my friend and yours, my Live and Learn co-host, Econoboy. What's up, Econoboy?
Doing all right. How are you
Better than
doing?
your 401k?
Yeah, I'm doing better than my 401k. That's true.
All right. Well, then let's talk about this. Obviously, I teed it up there. We've got specific things to discuss, but if you could give a brief 60-second overview of what the hell is going on with this economy is because of Donald Trump. What's happening? What's going on? What did he do, and why is it a big deal?
Yeah, sure. So Donald Trump announced a couple days ago that he was going to do what he calls reciprocal tariffs. Now, reciprocal tariffs, the reason I put it in quotation marks is because traditionally the term reciprocal tariff is you put a tariff on my goods, I'm going to put the same tariff on your goods, right? So you put a 5% tariff, I'm going to do a 5% tariff. And that's how the Trump administration framed it, because they want to frame it as like we're just getting the payback for what these other countries are doing to us. But of course, what's been leaked is, well, not leaked, it's just been people just found out, I guess, that what they actually did was they just calculated the trade deficits of various countries. So much like Trump has been saying for essentially his whole adult career, it seems like trade deficits are bad. And so effectively what he did was he put a huge tax proportionally on all of the different trade deficits of different countries. So essentially the higher the trade deficit you had with America, or I should say the trade surplus in the case of the countries trading with America, the higher the import tariff that Trump is going to levy. That's what's getting most of the news. But what he also talked about was a universal 10% tariff on basically all of those countries. So even if your trade deficit was small, he's like minimum 10%. And he also announced the 25% tariffs on basically all auto parts. And then before that, he also announced the 25% tariffs on steel and aluminum as well. And so that's essentially what the markets are reacting to. Some people are
How are the
this, which is
markets
accurate.
handling it? Would you say they're handling
Yeah.
it well or not well?
Yeah, the largest tax increase in modern history, being on the back of tariffs, is certainly not something that the ruling classes of the market like. That seems to be really bad because obviously, look, it's a tax essentially on the allocative process itself, right? I mean, we don't tax goods coming from Oregon to Texas because that would be very inefficient, right? If Oregon can sell better stuff than Texas can, or Texans can sell better stuff than Oregonians can, we just let that free flow because that's the more efficient way to run things. And so Trump is essentially doing that with all the trillions of dollars that we import from all these various countries.
Well, that sounds awful. We've definitely been covering it. I mean, watching Fox News struggle to cope with this, and even just other right wingers in general, they're either like going full bore into the cult, or they're trying to downplay it. And like Fox even removed its stock ticker. I don't know if you noticed that for like the first time in 20 years. They just like, we don't need this particular Chiron. And then you actually have some others coming out and admitting that this is a colossal fuck up. But I guess to focus on some of the specific things I mentioned. So Donald Trump seems to be from his golf course in Florida, Mar-a-Lago, seems to be begging Jerome Powell to intercede on the mess that Trump himself created. He says this would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He's always late, but could now change his image, and quickly. Energy prices are down, interest rates are down, inflation is down, even eggs are down 69%, and jobs are up all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. We will get into the Chairman Powell's response here in just a second, but can you explain why at this moment Trump is trying to publicly pressure the man he appointed to basically run monetary policy in the United States, Jerome Powell, why he is wanting Powell to cut interest rates? And is there a relationship between this request and what Trump just did with tariffs?
Yeah, for sure. I mean, in part, it's because Trump wants to run the economy hotter, right? He's, just grow the economy no matter what. He doesn't have a sense that basically inflation will be that bad if you cut interest rates all the way to zero. And by cutting interest rates to zero, which is essentially, the cost of debt, the cost of capital, the cost of investing, cutting that to zero or lowering that cost substantially means that more people will invest. But obviously, from Jerome Powell's perspective, that risks potentially runaway inflation, or at the very least, much higher levels of inflation than we currently see. We already saw how people reacted to, 8-9% inflation under Biden, even under more understandable circumstances. Don't imagine they'll react very kindly to much higher rates of inflation under much what should be ostensibly better economic circumstances now that Daddy Trump is in charge. And so, that's obviously part of the reason why Jerome Powell's a little bit, he's probably a little bit hesitant to listen to Trump.
Well, we'll play his response in just a second, but I'm curious here. Is Do you? So again, Trump appointed Jerome Powell to this particular position, and then President Biden reappointed him. There seems to be some public tension between Powell and Trump, and for some time, at one point, Powell took the gangster approach after Trump said that he was suggested that he would fire Powell, and Powell was just like, "No, I'm not going to resign." And then they asked him, "Okay, well, do you think the president has the authority to fire you?" And Powell said, "No, we don't recognize that." Just again, total gangster posture there. But let's get into Powell's response, because Powell seemed to indicate that this was not going to happen.
Lots of outside analysis, too. We don't have an FOMC meeting until May 6 and 7. So that's really a process that lasts several weeks, and we're not quite at that stage yet. But we're kind of thinking ahead to that and working through all of that. I will say, though, it feels like we don't need to be in a hurry. It feels like we have time to. Yes, it feels like we don't. No, I mean, it's like I said, you have inflation is going to be moving up and growth is going to be slowing, but it isn't really. To me, it's not clear at this time what the appropriate path for monetary policy will be, and we're going to need to wait and see how this plays out before we can start to make those adjustments.
So I guess my first question is, let's say that, because you mentioned that Trump likes to run the economy hot, and he did all 4 years he was in office. He deficit spent to hell and back, seemed really big on trying to grow the economy as much as possible. If Powell were to cut interest rates here, would it bring any sort of relief for the American people, even in the short term? Would it help give Trump the cover he needs to enact this tariff policy? Would it give him some sort of relief?
It would in the short term. I mean, certainly when interest rates are lower, the cost of investing as an individual also goes down, right? So, for instance, like buying into a mortgage would be cheaper, right? So mortgage rates would go down if you cut interest rates substantially. That's probably the single biggest thing that people kind of think of that hits everyday people in terms of being able to buy a house. But, again, really what Trump is advocating for is just running the economy hot, in part because he probably expects something of a slowdown. He probably wants to smooth that over as best as he can. He could be right. I think one of the reasons why Jerome Powell is kind of a little bit hesitant on this is because in large part, this is uncharted territory, because at the same time that everything that he's saying is true, we're going to have slowed down growth. If we have elevated prices because of tariffs at the same time that we have slowed down growth, well, the word for that is stagflation, right? We have lower growth, but also high prices. And that's
Jimmy Carter's ghost. Jimmy Carter's ghost. It looms large over the Trump administration. It's funny because somebody asked Trump about that recently, about stagflation. He's like, I haven't heard that term in decades, and you might want to get familiar with it because the chances of that increasing.
Yeah, you'll see the Google results of stagflation spike in the next couple of quarters.
And I'm looking forward to your response when that happens, because one of the things for those of you who don't follow Econoboy on Twitter, and you should also like and subscribe to his channel, is one of his favorite things to do is when shit hits the fan and we get a Google trend spike for something that was eminently predictable, like the 14th Amendment or tariff or whatever. Econoboy likes to put a smart ass tweet out like saying, I wish you guys would have done some homework in advance. So you'll probably get that moment here too. So then, of course, the other big piece of news I want to talk about is JP Morgan, one of the most respected global financial analysts. They say that the recession risk has increased by their estimation to 60%, not 16, not sweet 16, 60% since Trump announced tariffs. Quote, there will be blood. I'll just read a bit of this, and then I'll have you react to it and translate to those of us who are not economists. JP Morgan analysts told clients that Trump's tariff plan will have drastic economic effects. The risk of the global economy falling into a recession has increased from 40% to 60%, they warned. The restrictive trade policy also risks supply-side damage that'll lower U.S. growth in the long run. JP Morgan's chief global economist has a bleak outlook on the president's aggressive tariff policy, quote, there will be blood. In a research note to clients published on Thursday, JP Morgan's Bruce Kasman, along with several other company economists, warned that the risk of the global economy falling into a recession has increased from 40% to 60% in response to Trump's tariff announcement. So that doesn't sound really good, especially when the particular recession that people have been throwing around as a point of comparison was the Great Depression, because they say these tariffs are in many ways worse than the Smoot-Hawley tariffs, which triggered the Great Depression. So I guess just to end on this, what the hell are they talking about, and what does this mean, and should people be worried?
Yeah, people should definitely be worried. I mean, it is real. It is really unprecedented what Trump is doing. This isn't first Trump. This isn't first term Trump who was willing to just deficit spend and cut taxes, which Wall Street liked. This is second, much more emboldened term Trump, where he wants to do universal tariffs. And people have floated around these graphs which show that basically the tariff rates would be the highest since we started having sophisticated data on this stuff. So basically, since the early 1900s, these average tariffs that we're charging would be much higher if they actually get implemented, which is always a big asterisk with Trump. You never know if he's just going to completely bluff and take it all back the next day, with the damage already being done, of course. And so that's something that people have to keep in mind. Essentially, what they're saying is that, there's always a chance that for various reasons, it's hard to definitively say what's going to happen in the economy. But they're saying more likely than not, there will be a recession. That's just JP Morgan. But if you look at actual betting markets, and betting markets tend to be reasonably accurate, betting markets showed that Trump was going to win on election day. He ends up winning on election day. People who put their money where their mouth is just tend to be a little bit more accurate than people who just kind of say things. And the betting markets show the same thing. They show about 63% chance for a recession. That's the highest it's been in the last year or two. That was higher than it ever was under the Biden administration. And something that's worth keeping in mind is that during the bear market in Biden's administration, during the height of inflation in Biden's administration, the stock market was down about 25%. Well, in the last 2 months under Trump, it's already down 15%. Right. So a year of high, unprecedentedly high levels of inflation under Biden, and a lot of uncertainty because of that, global inflation as well. We had 25% reduction over the course of a year. In the last 2 months, because of policy uncertainty, because of Trump, we're already down 15%. So things are not looking good, unfortunately.
Yeah, that's not good at all. I guess my last question would be: is it possible? Well, is it reasonably possible? Because I suppose in economics, most things are possible, but is it reasonably possible that the worst case scenario could play out as a consequence of it? Because we just saw earlier today, China announced retaliatory 34% tariffs on all American goods as well. Is it possible that we could see a, maybe not Great Depression, but what about, a Great Recession level recession, like what we experienced in 2007, 2008, 2009? Is that possible to come out of this?
It certainly is possible. I mean, think about it, right? So the Fed Now forecast has us in this first quarter, just in the first quarter, declining in growth, even in the gold adjusted number by about 1%. The ungold adjusted number is almost 3%. And keep in mind that the trough of growth during the Great Recession was 3%. We import trillions of dollars a year of products, and of course we export trillions of dollars a year of products as well. And so when you combine a huge amount of taxes on that allocated process, which means inefficiency, which means higher taxes on consumers, which means disposable spending goes down substantially, all for what? An extra couple $100 billion a year. You're already deficit spending $2 trillion a year anyway. At the same time that the Republicans want to deport millions of people out of the economy, at the same time that, like you said, we might have a global effort to punish the United States for doing this. Hey, if you tariff everyone, guess what they might do? They might tariff you right back, right? And guess what? The U.S. is not most of the world's economy. Most of the world's economy is every other country. And so
all the non-US stuff, all
right.
of the rest of those things. Yeah.
Yeah. And so certainly I think that you could see a great recession, if Trump continues his course. I think that the saving grace here is that Trump is very willing to bluff, right? He seems very willing to essentially not stay the course. And it's probably somewhat likely that if you start to see a real recession materialize, that Trump would start to back off and claim a sort of Pyrrhic victory. Oh, we did it. Victory declared. We're liberated. We can get rid of the tariffs now. Like I could see that happening, and then obviously the economy would get better within reason afterwards. The recovery would be a little bit slower than the crash happened because supply chains are obviously having to adjust to new circumstances, and readjusting them would take a little bit longer.
And I have to imagine markets would be skeptical too, right? I mean, I have to imagine that like personal investors and like corporate investors would be like, I don't know what the hell to do with this guy. So we will be very cautious about how they in turn manage the recovery, right? Because that's my understanding is like so much of this isn't just the tariffs themselves, but arguably even more so is just the uncertainty about it. Are they going to be here? What's the extent of it? Is he going to take it away in a day? They can't actually plan and project in advance because he's so mercurial.
Well, in response to 8 years of sort of hawkish China policy under Trump and Biden, to be fair, a lot of companies, they said, we're going to take our manufacturing out of China. We're going to put it in Vietnam, India, Japan, South Korea. We're going to put it in these other foreign countries because they're not really under the ire of the U.S. administration. They spent billions and billions of dollars making that happen. And for the most part, Trump's rhetoric, even during the campaign trail, sure, he talked about universal tariffs, but the markets really just did not think he was serious about that. And they spent all that capital to relocate outside of China. So many companies did. And then Trump comes out and says, oh, yeah, we're going to do 30-40% tariffs, even on Vietnam. We're going to do tariffs on India, even on Indonesia, places like that. And so you're right. This is one of the reasons why economists say that tariffs decrease growth in the long term, because that investment doesn't necessarily come back anytime soon. Companies aren't going to just turn around and say, oh, I guess Trump got rid of the tariffs. I guess I'm good to spend another billions of dollars of capital. No, it's like you're scaring them from investing because you're not stable. You're not doing the things that you're saying you're going to do in any sense of the word.
Yeah, well, definitely unstable is one of the best adjectives for Donald Trump. We'll close on this. Econoboy, of course, has a Substack, which you should definitely check out, econoboy.substack.com, in which he talks about politics in general, but obviously typically from a more, economics lens. He just concluded his longstanding series about the left needing better tax policy. And I guess he's blowing us a kiss, it looks like. Kiss, keep it simple, stupid. So definitely check him out. And Conboy, man, I appreciate you doing this. I'm sure we'll be talking in the next few days about it as well.
For sure. It's always fun.